All right. Welcome. My name is Daniel. We're going to get things going here in just a couple of minutes. I'm with Vantage Point AI, and today we're going to be doing some live market analysis from the most recent up-to-date forecasts right out of Vantage Point artificial intelligence software. We've got a couple of minutes before we get going here, so we'll dive in to the analysis, and we'll dive into several markets. Our plan today is to look at Apple, look at Amazon, Chipotle, Tesla, a few more things. We're also going to do a little market analysis on the S&P, the dollar, gold, some of the key markets. So we'll give everybody a chance to get set up, get logged in, get things up and running. Looks like from a technology standpoint, we seem to be operating as planned, which is always good. You know, sometimes there's things that happen, but it looks like we're good at this point from a technology standpoint. So we'll give everybody a chance to get going. This morning there was a new CPI print, updated information for April. We'll take a look at what that said, and we'll talk about how that information can have an impact on the markets and whether or not that print, had any effect on the market outside of what the artificial intelligence was able to tell us leading into this morning. Hey, how's it going Tuesday, Dragonfire? Thank you for jumping in the chat. He said, love my Vantage Point. Thank you, Vantage Point family. Well, we love you. Thank you for that. For those of you that are here, that are part of the Vantage Point family, Vantage Point AI and the software that utilizes artificial intelligence, thank you for being part of the family. And for those of you that aren't participating in Vantage Point or don't have the Vantage Point software, of course, reach out. We'd love to answer your questions related to what Vantage Point has been doing and has been doing now using artificial intelligence since '91. So we're going to get things going here in just a second. I've got 11:30 a.m. Eastern time on the dot. So let me officially say for everybody that is here, welcome. This is an opportunity for me to go over the Vantage Point software, look at the real forecast, look at what the artificial intelligence is saying, interpret it, help you understand how the artificial intelligence has been so accurate at indicating market direction, market movement, reversals, strength, momentum, so many different things. We'll walk through those different details because at Vantage Point we know it's hard as a trader, right? Trading involves risk. You should not be trading with money you can't afford to lose, right? Because it is hard. That's one of the things everybody's got to understand. You got to have capital preservation. Money management is key. I always like to say minimizing your downside risk before maximizing your upside potential is important, right? And as you can see from Tuesday's Dragonfire, I'll share some user experiences with you. I'm not intending to say that you're going to be just like them. Their results may be atypical. I haven't verified them, but I do like to share, as you can tell. This is a live session with what other people are saying. And if you have a question or a comment, jump into the questions box. Jump into the comments here. They're live. They're open. I'll keep my eye on them. So as we go through today's analysis, I can make sure I'm providing you information that you're interested in, that you're looking for. All right. So if you look at the screen right now, I'm just going to change screens really quickly and make sure that you can see my Vantage Point software. And the intention for today is to walk through the analysis on several key markets. Some of the markets I put in the title, like Apple, Amazon, Chipotle, Tesla. We'll take a look at Netflix and some of the other markets. But you can see here on the screen, I've got the E-mini S&P 500 for the last several months. And I wanted to start here because it's important that everybody understands what the artificial intelligence has been saying and is saying about the S&P 500. It's a good index to understand overall sentiment of the market. One of the things that I like to always do is get an overview of what's going on and the flow of the markets, bullish, bearish, or of course consolidated like we're seeing now, before any decisions or any analysis is made when looking at individual assets like stocks or currency pairs or whatever it might be. Hey, Dennis, good morning. Thank you for being here. All right, so here we are on the S&P 500. Let me give you just a quick lay of the land. I'm also going to get a pen, something I can draw on the screen with here just so that you can see where I am. I know in live sessions sometimes it's not always easy to figure out where on the screen I'm pointing or talking about. So here's my trusty pen. Here we go. S&P 500, just to give you a quick layout for those of you that haven't been able to experience VantagePoint for yourselves. There's a date range here, but there's also right in the middle of the screen, I've got a date range so you know exactly what dates we're looking at. We've got 3 months of data on the screen right now. Price scale on the right, pretty standard candlestick chart. As a matter of fact, what we've done is spent a lot of resources, time, effort, money on making the artificial intelligence output something that you can interpret that has a very small learning curve. So by the end of today's session, I think everybody here should be able to understand what the AI was saying. And you can see in the middle of the screen, I've got a blue line. This is a predicted moving average. It's being compared to a simple moving average. And the difference in a predicted moving average versus a simple or an exponential moving average is that there's actually predictive information going into the calculation of that blue line. And what that predictive information is generated from is from the artificial intelligence. So I'm not going to get too much into the weeds. If you've got questions or you want to get more details of what the artificial intelligence is doing, by all means, please reach out. Reach out. You can go to VantagePointForecast.com. We'll put that link into the chat. So in case anybody does have questions that I don't get into here in this session or you don't ask, you can reach out one-on-one. We'd be happy to answer those questions for you. But let's just start out talking about the fact that there's predictive information in the formula. There is a patented formula that's happening. So what we're looking for is whether or not that blue line has a higher value than that simple moving average, that gray line. And a great way to identify that it does is that there's a green cloud, if you will, a green shading in between those lines to easily identify bullishness expected. But there's also some other hints within that line that can help you understand that. For instance, the gap widening. When that gap is widening, that is an indication of really good strength from a predicted price standpoint. When the gap is narrowing, that tells you that there's a little bit of strength leaving, if you will, that asset. In this case, we're talking about the ES. And very clearly, you can see, that blue line has been getting closer and closer to that gray line. That shaded green area has been shrinking and shrinking now for days. And that is the artificial intelligence. Actually, since back here, from a day standpoint, you can see right here, 4/5, beginning of the month, this is where that blue line started to indicate that there was some strength weakening, some weakening of price. Now, this is one of the indicators that I'm going to look at first. It's the indicator that I'm looking at first in this analysis. So as you walk through this chart with me, understand that I'm starting there, and then we'll start to look at some other things. We could take a look at the Euro USD, Marco, if we've got some time here at the end. Absolutely, we'll take a look at that. Here, looking at the ES, what we can understand is that there is a weakening going on with the ES. We don't have a trend reversal indicated yet. One of the things that can identify a trend reversal, or the thing that identifies a trend reversal, key thing, is when that shaded area goes from green to red, right? When it goes from green to red, that indicates that there is a reversal expected over the next day or two. We don't have that yet at this point, right? But one of the things that we can see very clearly is that the trend is weakening because that shaded area is shrinking. Now I'm getting into the details here, we're getting as deep as we can and just understanding that blue line. But when we're talking about market analysis, I think it's important to understand that there's a lot of different ways to, interpret indicators. And in this case, predictive indicators. One of them is, what direction is the line pointing? How strong is that slope? Is it a very strong upslope or downslope? The gap between that predicted moving line and that regular moving average. All of those things can provide hints and clues onto where the trend is expected to go. So at 6:30 last night, by the way, for anybody that doesn't use VantagePoint, understand that this updated forecast is a forecast that can provide information up to 1 to 3 days in the future. This is a forecast generated from the AI, and it updates at 6:30 p.m. Eastern time every evening. So I've been able to analyze this and look at this data since last evening and this morning, prior to any information coming out about CPI. And we'll talk about that CPI information here in a second. But what I'm looking at here is a weakening of the ES, not necessarily a trend reversal, but a weakening of the S&P 500. We could probably see a similar chart if we looked at the NASDAQ or we looked at the Dow, but the ES is a good representation of what the market is expected to do. Now here at Vantage Point, we do train a process that says, look at the S&P 500, look at the Dow, look at the NASDAQ, look at the dollar and gold and light sweet crude oil to get an understanding of what the major markets or the influential or the nucleus markets, as I like to say, are doing, so that you can apply that analysis to any other analysis, like on a stock, for stock options, currencies, futures trading. It's a very, very powerful process. We're just doing one piece of it here just to get everybody to take a look at what is going on with the ES and what's expected to go on with the ES. Now there's something else here on the chart that I wanted to call some attention to, and it's the predicted neural index. And this predicted neural index is indicating for me that there is some short-term strength. So we can see that right now, prices, although weakening from a trend standpoint, still have a little bit of strength in them because that neural index is green. Very easy to interpret the neural index. Green, bullish strength; red, bearish, right? Easy to interpret. You don't have to overthink it. And that's one of the great things about doing the analysis like this, is that you could remove the emotion as much as possible from it. I don't have to apply my personal opinion to the S&P 500 if I've got predictive information generated from global market analysis used by artificial intelligence. I can remove, AI doesn't have any emotion at this point that we've been able to determine, right? There's a lot of different other theories out there, but at this point I can use the AI to reduce whatever emotion is possible. So I can see there's a weakening in the trend because of the blue line. I can see that price still has a little bit of strength in it, right? But I can also see right here there is a gray bar. And this gray bar indicates the predicted high and predicted low for today's trading on the ES, right? Sans any information except for price. And what it's telling me is that I can expect a lower range day, if you will, or a lower typical price today than the previous day. Now, one of the key things about this is with the CPI data coming out, we know that that can cause a quick spike or drop in the markets. Fundamental information like that, like earnings, inflation information, a lot of different things. You remember the banking debacle, a lot of things can cause some momentary movements in price. But this gives me a gauge to say, hey, all things considered, taking out the fundamental activity, this is where the ES is expected to sit at this point, or be today. It's a highly accurate forecast, but it's telling me that I can expect some weakness. So what I'm seeing here is I've got a trend that is starting to weaken. I've got a little bit of strength in price, but from a one-day range prediction standpoint, I have more weakness. And what you should start to be hearing here, and if you're not, let me explain what I'm saying, is we've got multiple predictive indicators generated from looking at several markets. And I always like to take a look at the markets. Let me show you really quickly. What the artificial intelligence is actually doing here is it's doing global market analysis on a set of intermarkets. I just put them on the screen. The AI is going out and figuring out what is influencing the S&P 500 the most, right? And I don't mean correlated markets. I mean driving the price or the value of the S&P 500. And you can see there are the major world currencies, international markets like the yen, right? Also gold, light sweet crude oil is in here. Interest rates are in here. So you can see there's several futures, several currencies. There's even some stocks like the Louisiana Pacific and Garmin. A lot of people wouldn't expect these assets to have an influence on the S&P. And that's another great thing about the AI. And I'll move on from this, but I just wanted to make that point, is that the indicators that I'm doing analysis on right now are generated after the AI has figured out these intermarkets and then utilize that information to generate predictive indicators. By the way, in case you're wondering, this is all patented technology. All patented technology, and traders have been using it since 1991. That's 32 years. So this isn't theory. Understanding how to interpret it is where the real value comes in. And I can see that I've got indicators that aren't quite in agreement right now with what I'm seeing on the S&P 500. Hey, Renee, thank you. I see you subscribed. Perfect. Good. Sorry, I wasn't looking at the chats, but hey, Lane, nice to see you, my friend. Lane Mendelson, our president, participating in today's session. Glad you're here, my friend. The key to this, not for Lane, but for everybody else, the key to using this is that the Mendelsons have put a lot of work into making sure that the artificial intelligence is accurate and useful. And I think you can see with these indicators not in total agreement, already what would you suggest the AI is saying about today's market? And this would have been out at 6:30 last night. You can answer right in the questions box or comment. By all means, feel free, jump in there. But what that's saying is that there's confusion, confliction amongst the indicators. We don't have an agreement. We don't have confluence. So what we're saying is we can expect some channeling or some consolidation from the ES. But we've just started. Let's keep on doing some analysis and see if that hypothesis is supported or not. We might reject it after we get through our full indicator set. And I'm not going to cover every single indicator available in VantagePoint today. I'm just going to cover some of the key ones so that people that don't have access to this information on a regular basis can see exactly what the AI is saying and doing. Well, let's go down to these indicators at the bottom. These are very powerful momentum indicators generated from the artificial intelligence. They're called predictive differences, and they're going to give me some momentum information about the next 1, 2, and 3 days expected momentum. And I can see my 1 day, this is the light blue line, is telling me that there is basically sideways momentum looking back over the last 5, 6 days or so. My 2 day is telling me that there is bearish momentum expected. And my 3 day is telling me that there is more bearish momentum expected. So again, more consolidation and bearishness moving in from a momentum standpoint. And for those of you that trade the markets consistently, or even those that are thinking about getting into the markets, it's safe to say that if momentum isn't supporting price, if momentum and volume together aren't supporting price, it's going to be difficult for price to continue climbing bullishly if that's what your assessment is. And in this case, I don't have momentum supporting price or a bullish price movement. I have the price trend starting to weaken and consolidate. I even have some weakness working in from an overall 1 day prediction standpoint. I do have a little bit of strength happening right here with the neural index. So that tells me I'm not expecting the ES to dump today. It's not going to have this huge, horrible down day, but it's also not going to have a big bullish day based on what we're seeing from the artificial intelligence. The AI updated this information for me at 6:30 last night. So, I could have slept easy, and I did. and then this morning, woken up to understand what's expected in the markets and expected from a CPI. The CPI data came out at 8:30 a.m. This morning. And that CPI data came out, the year-over-year number, let's see, was expected to be 5.6%. The actual is 5.6%. The month-over-month, 0.4%. The actual came out at 0.4%. So the actual print matched the forecast. So what does that mean? How is that going to impact the ES if inflation is exactly where it was expected to be? Well, I'll tell you. When you see an assessment like that and it ends up being exactly what the forecasts were, it's not going to have an overall huge impact in the markets. Now, this is just my opinion. I'm not providing trading advice. We might see a quick spike or something like that, a quick pullback. But all in all, remember those intermarkets I showed you that the artificial intelligence is doing the analysis on? That's going to be where I'm going to get my primary information from, because CPI wasn't expected to be anything crazy. It's been 5.5, 5.6, all year, January, February, March, right in that range. Nothing too wild going on from a CPI standpoint, which means those intermarkets are controlling price. And if you're not utilizing information like this, then in my opinion, you're guessing. Because if you just look at the ES by itself, and you just look at some of the indicators you have, without those intermarkets being applied, those intermarkets are actually hurting you if those indicators are ignoring them. In this case, VantagePoint is using them to my benefit and your benefit by understanding what's expected to happen based on those intermarkets. So now we know CPI data came out, nothing dramatic expected to happen from it. It was forecasted at 5.6, came out at 5.6, 5.6%, which means the trend that is currently expected to happen in the ES is going to happen with a high likelihood exactly the way Vantage Point is indicating it. So what we can see here is that we can see that there is a weakening in the trend. We can see consolidation expected to happen. We can see nothing is going to run too much bullishly. There's not going to be anything too much bearishly. A sideways kind of day is currently expected from the ES based on what the artificial intelligence was saying last night, which means consolidation. And we can take this a step further. I'm going to layer on support and resistance. By the way, in a previous session, you can look back on the videos. If you haven't subscribed to the Vantage Point channel and seen some of the previous live sessions, go check them out. I did some education around Vantage Point's verified support zone and verified resistance zone, so that traders can get another cut of data, another piece of data looking at support and resistance. I've now added them to the chart, and you can see what I've added is a couple of things. I've got these red arrows indicating a resistance level. I've got these green arrows indicating a support level. I also have a dotted line connecting the two so that I can understand where those support and resistance levels could have an impact on future price. Right? Very, very easy way to use these indicators. And here's the great news. I didn't have to draw them. I turned them on in Vantage Point. I turned them on, and now I can see them on the screen. Where these indicators go to the next level is that they're not just support and resistance levels, but it creates a support and resistance zone. So this would be, I would consider it zone 1. All right, let's just call it zone 1. What it's doing is it's comparing the most recent resistance level with the next most recent resistance level and creating a zone. For those of you that are very familiar with support and resistance, you know that level can mean something, but just because price hits that level or passes that level doesn't mean it's going to have an adverse effect on price. There's actually a range that could have an impact on price. And without knowing that range, you could get head faked. You could get some false positives. So the Vantage Point resistance zone helps me understand where I can expect a potential turnaround or even a breakout, right? If we can get enough momentum to get through that zone. The width of the zone tells me that, there's some very powerful old price points up here. And here's zone 2. Oh, let me see if I can write a 2 in here. There we go. Here's zone 2 and here's zone 3. They're all bunched up pretty well under 4240. So I know it's going to need some real powerful momentum. The ES is going to need some real powerful momentum to push into this first zone, through this first zone, into the second zone, and through the second into the third. It can't make that move without momentum and volume pushing with price, right? If momentum, volume, and price are in sync and moving higher, right, that's an indication that that resistance zone is likely to be broken. Well, we've already talked about how we're seeing some momentum falter. We're seeing momentum peel back a bit from the Vantage Point predictive indicators. So that tells me the likelihood that if price gets above this resistance level, the likelihood that it stays above this resistance level is very, very low. Why? I don't have momentum supporting a push higher in price into that resistance zone through that first resistance level. Well, if I don't have momentum supporting price and price is already struggling to get up there, again, I can expect the ES to stay below that resistance level. When I say stay, I don't mean spike above it. I think pre-market we had a spike above it as soon as CPI data came out. That CPI data had a very short-lived impact on price, and then price settled very quickly on the ES to where it is now. I think right now the ES is at 4140, so it's literally right here currently as the ES is traded. It's sitting inside of that gray bar. It's sitting right where Vantage Point indicated it would sit. It spiked up to 4177 this morning on that data. So this is kind of the impact. This is where the top of that price would be from earlier this morning, and now it's sitting right here. Again, you can see this is a resistance level. Price is staying inside of that resistance level. It does not have bullish momentum to push it higher based on what I'm reading in Vantage Point. Again, I'm not looking at this and really drawing any personal conclusions from it. I'm looking at the AI and reading what the indicators are telling me. And in this case, the indicators are saying expect consolidation today, expect more consolidation going forward, no big impact from the CPI information. And knowing that gives me great confidence when I'm going to think about some of the moves that I might be watching. For instance, like we look at Apple or Amazon, Chipotle, we'll take a look at those. But I think by now, everybody should have a pretty good understanding of the information that we're looking at so far, including support. I explained resistance pretty well, I believe. If not, you can let me know in the questions box if there's some questions related to the support or resistance. But excuse me. What I can see here from a support standpoint is very clearly there's a support level sitting here right at about, let's call it 4,100 roughly, somewhere in that range. Pardon me. Which means there's a channel happening. I can see the channel. I can see the support and resistance levels. I do not have momentum pushing strong one way or the other, and I can expect more consolidation from the ES. Do me a favor. Go to the questions box or the chat right now. You know, if you got a question, leave a question. If you want to chat something in. But is it helpful to you to know that the ES is not expected to do anything dramatic today based on what the artificial intelligence was saying last night? Remember, this information was updated at 6:30 last night, right? 6:30 last night, the artificial intelligence said we would expect more consolidation today. Hey, M109 Rider, I see your question. Pardon me. What's the expectation on price for later today? Again, more consolidation. Price is not expected to do anything wild throughout the rest of the day based on what the artificial intelligence is telling me. Now, nothing is perfect. Obviously, trading and analyzing is hard, but what I can gather from what the AI is saying is that I'm not expecting anything wild to happen on the ES from a price standpoint today. Matter of fact, the most wild thing that's happened to the ES has probably already happened, right? Once that CPI data came out. But regardless, what we can see here is that we're going to see the ES with a high likelihood, again, nothing's perfect, stay right here, right where it's been for 1, 2, 3, 4, 5, 6, 7 of the past days. We are consolidating. We are in a sideways channel. For those of you that like to sell options on the SPY or something like that, you can see these indicators provide you really great places to go sell some options, create some income, write some iron condors. A lot of things that you can do when the markets go into a channel like this. And the predictive indicators help me identify that. Now, some of you also like to use momentum indicators like MACD, stochastic, maybe the Williams %R. And as you can see here, I've got several of them in VantagePoint, but these are predictive. Every single one of these momentum indicators that I'm adding to the chart right now, and I am adding several of them, are predictive, meaning the AI has taken the formula that you're used to for MACD or RSI, and it's used that formula, but then it's added predictive days information to that formula to give you a predictive calculation. So think about that. Not only are you able to get momentum indication from indicators that you are familiar with, but they've been enhanced and powered by the artificial intelligence to update those formulas with predictions. So now I can go look at those lines, and we can look on the right-hand side of the chart here. Let me just get my marker over there. I can look at those lines and try to understand what those lines are telling me. And from a MACD standpoint, I can see that my MACD line, the blue line, is a predicted MACD. That moving average is above the gray line. Similar interpretation, but the gap is getting smaller, which tells me there is still some bullish momentum left in this from a MACD standpoint, but it's weakening. It's weakening. If that bullish momentum is weakening, well, then I know it's going to be very difficult to get past that resistance level that we were talking about up here because it doesn't have a lot of momentum there. The predicted RSI. Yeah, you're exactly right, Real Food Dude. It's leaning up a little bit, but not too much. This market is starting to flatten out, and you can see it's been forecasted for here on RSI. The predicted RSI has been pretty much in the same spot now for a couple of weeks, telling me that momentum is weakening. The bullish momentum that we've seen leading up into that point is weakening and is weaker and is now moving sideways. So I'm getting a slightly bullish from MACD, but more of a consolidation from RSI. Stochastic, sideways as well. And I know that because there's two lines of stochastic, and they're on top of each other. It looks like one. Very clearly, I get a very clear indication that there's Consolidation expected from a momentum standpoint, right? And I can do the same kind of analysis with these predictive indicators. You can see TSI, which is a predicted true strength indicator, has a little more bullishness to it, but that gap is narrowing. That narrowing gap tells me, yep, there is some weakening in that momentum as well, even though it's still slightly bullish. And percent R is pretty much the same place it's been for 6-7 days, more consolidation. So let's just take a step back for a second before we jump into some of the other analysis and take a look at what this is saying. So before CPI came out, VantagePoint was very clearly indicating that we've got a little bit more bullishness than bearishness, but overall we can expect consolidation and we can expect a sideways market today from the ES. CPI data comes out, there's a spike in the ES, it jumps up to 41.77 I believe, and then it peels right back to a sideways market where it currently sits right now. Now, it's early. It's what? It's noon, right? So it's early in the day. Still a lot of trading to be had, but based on what we're seeing from VantagePoint, there's nothing dramatic expected. As a matter of fact, getting above this resistance level based on the fact that we do not have strong bullish momentum, it's going to be difficult, right? It's going to be difficult. So how do I apply that to a trade strategy? How do I apply that to my trade plan? Well, take a look at your trade plan. Look at your risk tolerances. That's important. We don't just make blind decisions, in my opinion. And what this is telling me is that if I'm extremely long or feeling very bullish about the current market, I know that there's some weakening. I've got to go into protection mode. I've got to go into loss mitigation mode. I've got to start thinking about holding on to any gains that I've been able to accomplish up to this point. I've got to think about, setting tighter stop losses, mitigating any loss. There's a lot of strategies. Heck, maybe from a stock option standpoint, I should start thinking about writing some covered calls and looking for that as a strategy to protect my investments. A lot of different ways to use this information, but the key here is you've got the information now generated from the artificial intelligence and can make stronger, in my opinion, better, more effective trade decisions. Let me just take a look. I want to look at the chat box really quick, make sure I haven't missed any chats. Dave, I see you say, which way does AI indicate the market will break out of consolidation? Right now, the artificial intelligence is saying more consolidation. We don't have a breakout expected at any point in the next day or two. And the reason for that is because these predictions go 1 to 3 days into the future. This came out at 6:30 p.m. last night. So what it's saying for the rest of the week, we're expecting more consolidation. If you don't have a consolidation type strategy as part of your trade plan, well, then you've got to think about, mitigating any losses. You got to think about going and finding some opportunities that could have some momentum gains. Now, remember this is the ES. So it's the overall, one of the indices, and it's kind of the overall market. It's an index that can help you understand the overall market. That doesn't mean there aren't some stocks out there that have great opportunity to trend higher. It does mean, in my opinion, again, this is not trading advice, but if I'm going to take a trade or I'm looking to go long or looking to go short, then I need to reduce my risk. I need to reduce my R. If my trade plan calls for a $2,000 max trade, if you will, well, if I'm going to go counter trend or I'm going to go take advantage of an opportunity that looks like it's expected to pop, even though the ES is expected to be sideways, well, then I should consider going half that or down 75% to wait for the breakout in the market to support a move. Again, managing risk using predictive indicators, making better trade decisions, all while protecting your downside, is a key to consistent and confident market decisions. And that's really what I'm trying to get across here as we rely on that. So thank you for your question. Let me take a look, see if I've missed anything. Since the price spiked up on the announcement, are we wrong to infer that maybe the trend is a tad stronger than VP indicated? Great question. Great question. The spike on the announcement has nothing to do with the trend, right? In my opinion, the spike on the announcement is the announcement. The trend has been slightly bullish the entire time. Remember the blue line, the very first indicator we look at, I think that was Real Food. Yeah, the blue line is above the black line. The blue line is saying bullishness, weakening bullishness, but still bullishness. right? We also have one of the predictive indicators with momentum, MACD, saying bullish. We have two saying bullish. So there is clear bullishness in the trend, separate from an announcement that caused a quick spike. You see how quickly, though, the intermarkets I showed you took over after that announcement? The announcement happened, nothing to see here, and the intermarket said, well, then we'll just keep on pushing the ES the way we were pushing the ES prior to the announcement, right? And that's going to happen. So good question. I appreciate that. All right, let's keep on going through this. I think we've got a pretty good assessment on the S&P 500. I'm going to jump over to the dollar just so we can take a look at the dollar and get a good assessment on what we're seeing from a dollar standpoint. As a matter of fact, I can see that from a dollar standpoint, all in all, I've got an overall trend that's been going bearishly. My 3-day prediction on the dollar, check this out, is continued bearish. I was on the 2-day prediction. What does that mean? Well, that means that Vantage Point is indicating the overall longer trend on the dollar, the 3-day, to be more bearish than the medium-term trend. But check this out. That blue line is above the gray line. But look, remember what I said. The gap is a hint and the angle is a hint. All of this very clearly tells me that I can expect some weakening in the dollar. And I you know, from a 3-day outlook standpoint, Vantage Point has been very bearish, the dollar. As a matter of fact, the neural index was red last night at 6:30, saying the strength in the dollar does not look good. There's more bearishness expected. My momentum indicator, my short term, look how sharp it turned down a couple of days ago. My medium term is sideways, right? My long is still bullish. So I'm getting again some disagreement in indicators saying there is no trend reversal expected in the dollar. Here's how I know. If my indicators agreed, if I was getting bullishness from my predicted crossover, if I was getting bullishness from both my predicted high and my predicted low, if my neural index was green, if my momentum indicators were all pushing up higher, if, these are a lot of ifs, but what I'm saying is if these things lined up this way, then I could expect a trend reversal. If, for instance, I had a failure of support at some point in here, right? Because what happens is it sets a support and then it wants to come back and retest that support. If I already had a failed retest on that support level and it bounced, if that was the case, I could expect a potential bullish reversal along with those other ifs. It's safe to say I didn't have all of those. I had bearishness, I had consolidation, I had weakening. Let's keep on going through this. Let's go add our momentum indicators like we had before. Down here, MACD, RSI, TSI, stochastic, percent R. I'm just going to pop them all on the chart at one time and see what I can see related to the dollar. Look, I've got consolidation here. I've got some bullishness here with RSI. I've got some bullishness with stochastics, but I still have bearishness and consolidation with TSI. I have percent R that popped up bullishly and pulled back. So I'm getting a lot of mixed signals from my momentum indicators telling me I don't have enough momentum to reverse this trend. I have enough momentum to keep this trend going the way it's been going. And that blue line being below that gray line, that shaded area being red, says still continued and expected to move bearishly from a dollar standpoint. Now the predicted low on the dollar, you can see if I click on this right here, I'm just going to give you a little quick tool tip. The predicted low is 102.214. That's what Vantage Point predicted as a low for the dollar. The dollar low, let me see if I can pull it up, is down around, got down to 101.1, something like that. It's currently at 101.2. Well, there you go. The high, I said low, I said high. You can see on the screen, P high 102.24, P low 101.59. That is the predicted high and the predicted low that came out at 6:30 p.m. Eastern time. So the predicted low being 101.59. The dollar is currently at 101.25. That is a pretty powerful prediction, especially knowing that the overall trend was expected to be lower and I didn't have enough and I don't have enough momentum or a bounce off support and resistance to reverse that trend completely. Now the question I always get is, does that mean that the dollar is expected to continue going lower? Yes. Vantage Point is indicating the dollar still has some weakness in it. How much lower it's expected to go? Well, I can tell you with this support level down here, unless we get a whole bunch of bearish momentum, that 101 level is going to be very hard to beat. Very hard to beat. right? So we can see a pullback down to that 101 level, but in the coming days, Vantage Point isn't indicating that there is there's enough momentum to push lower than 101. And you can see that 101 level is an old support level from January 26th. It's an old support level going back to January 18th. That is a very strong support level right here at 101. We're going to need some strong momentum to push lower. We're also getting into the halfway mark of the month, and to push lower going in towards the end of the month, because we know that towards the end of the month, and if you don't know this, the dollar just has to be bought, right? People have to buy the dollar. It just has to happen that way. So we're going to see a 101 as something that's very hard to break, and if it gets down there, we can expect, if we get enough bullish momentum, that prices start to bounce off of that level. That 101 level is a very key level to keep an eye on. In addition to that, I can put on a triple crossover indicator to get some more levels to say, you know what, until the dollar really works its way above 102.2, the T-cross long level is 102.288. That's this dark blue line. Until prices can get above that, I'm still not thinking about bullishness related to the dollar. The artificial intelligence is giving me all the hints that I need to know before I start to think bullishly about the dollar. Let's apply that same analysis to gold, right? If we go through gold with that same type of approach, and you know what I'll do is I'll just take and I'll mirror all these indicators. I'm going to save them as a default so I don't have to add them one by one, and I'm just gonna mirror them right onto this chart. I think we walked through those indicators in great detail. If you've got some more questions on those indicators, happy to slow things down a bit and walk through those questions. But what I can see here on gold is that the prevailing trend right now on gold is bullish, right? The blue line is above. The shaded area is green, indicating that gold has more bullishness than anything. Gold, different than the ES, has a higher high and a higher low projected. We can see that gray bar has a higher high and a higher low. So there's bullishness there. It does have a red and roll index, which says, you know what? There's bullishness in the trend, there's bullishness in the day, but from a strength standpoint, it doesn't have all of the necessary strength to say this thing could break through that resistance level. Now that resistance level, in case anybody is wondering, is right up here. You can see it's at, let's call it 2050 for ease of use on gold. That resistance level would need to be broken, and we'd have to get a close above that. We don't have strength in price to have that happen today. It could break, and I think it broke based on the CPI print, but to sustain above 2050, it's going to need momentum, right? Well, when we look at our predictive momentum indicators, we don't have bullish momentum here on the predictive differences. Matter of fact, we have consolidating to bearish momentum. We don't have bullish momentum on MACD. It's consolidated. We don't have bullish momentum on RSI. We actually have a little bit of bearish momentum on RSI on stochastics. And we got consolidation happening on TSI. Percent R, same situation. We're getting more consolidation and bearishness than we are bullishness. So the likelihood that gold breaks and stays above 2050 is very low. Again, let me reiterate, nothing is perfect. But if I can get an accurate forecast that's up to 87.4% accurate around the direction that something is expected to go, depending on the market or the asset that I'm looking at, that gives me an edge. What Vantage Point was saying is that we could expect the dollar around that 2023 mark. Currently the dollar is at 2022, excuse me, gold, not the dollar. Gold at 2023, $2,023 an ounce. It's currently at 2022. It did spike at the beginning of the day, and then it pulled back right to the levels where Vantage Point said it was expected to go. And if you know me, if you've listened to any of these sessions, I like to make the Vantage Point joke that gold did exactly what Vantage Point told it to do. Not really, but you know, I gotta have a little fun, right? Let me take a look at the chat really quick, make sure I didn't miss anything. Yeah, thank you, Ryder. You said your charting appearance is more user friendly. Yeah, I like that. The shaded area, the clouds. This isn't something you're going to get in Thinkorswim. Matter of fact, for anybody, including Ryder, that wants to get this user-friendly interface that's easy to interpret, in my opinion, can help you remove emotion, go to VantagePointForecast.com. We can talk with you one-on-one, answer any questions you have. These indicators are proprietary. The process that creates these indicators is patented. The intermarket analysis that the artificial intelligence is doing, nobody else in the world is doing, and there's a patent protecting that, saying that it is unique, and obviously you don't get a patent unless it actually works the way you say it works. So that's what's available in the VantagePoint software. So as I said, VantagePointForecast.com, that's your spot to get some of this stuff. Let's move on to light sweet crude, and then we're going to jump into the stocks that we were talking about. Here's light sweet crude oil. You can see from a crude oil forecast standpoint, we'd be expecting just by this some higher prices in light sweet crude oil. Now I want to point something out really quickly. This is how powerful the artificial intelligence is, in case you haven't seen it before. That blue line crossed above back here. The neural index was green, and the predictive differences had more bullish momentum than anything. We had a bullish indication on light sweet crude oil expected to go higher right here. I'm gonna put a big X, marks the spot, right? That's the day right there. So the next trading opportunity I had a great opportunity to go long the light sweet crude, right? That's here. 1, 2, 3 days after that entry, so 4 full trading days, generated a substantial gain. This is a hypothetical gain here of one contract traded on light sweet crude oil generating almost $3,000. That was prior to last weekend, the announcement that it was going to be cut, that production was going to be cut. Well, anytime there's a reduce in supply and demand doesn't change, that causes prices to jump. If the supply is getting reduced, just how basic supply and demand works, you probably know this, but let me just review it for those of you that don't. If the supply gets cut and demand stays the same, values increase, right? If supply increases and demand stay the same, values decrease. Let's keep it going. If demand increases but supply stays the same, value increases. And then vice versa, if demand decreases but supply stays the same, value decreases. Just a quick, supply and demand walkthrough. Well, when that announcement happened, that meant supply cut, demand stayed the same. Here's a huge jump in price. The artificial intelligence indicated bullishness in light sweet crude oil on 3/27. The announcement came out, I think it was Sunday 4/2, something like that, if I remember correctly. So or might have been Saturday 4/1, right there at the beginning of April. And it caused this huge gap up in light sweet crude oil. VantagePoint was already forecasting an uptrend. Just that gap up from one day close to the next day open is a 5.77% jump. A $4,300 profit, hypothetical gain here in this trend, doing one contract of light sweet crude oil on top of that almost $3,000 that I identified earlier. That's over $7,000 in gains because the artificial intelligence was able to indicate that early reversal. That puts you in a position to profit early. Gives you the ability to understand that there's bullishness coming. And when something like that happens, now I'm not saying AI was predicting a cut in supply. That's not what I'm saying. I hope nobody's taking me that way. What the AI was saying is prices, due to that global market analysis that the artificial intelligence is doing, are expected to rise. They rose, and then the announcement happened, and they rose. And they're expected to continue rising based on what the AI is saying right now. If I go load on my other indicators that we were talking about before and mirror those, you can see that we've got some major resistance levels up here for price to contend with on light sweet crude oil. As a matter of fact, that top resistance level at 83.27, I can go put on this indicator called the 52-week look back and verify how far that is from the 52-week high. I can see that it's got plenty of room to that 52-week high at 121. So I don't have to be overly concerned about that high, that resistance level being something that is a powerful level of 52-week high. It may be a 26-week high, but let's take a look. I'm going to go right into the properties of that indicator, and I'm going to go down from 52 weeks to 26 weeks. I'm going to pop that on the chart and see, nope, still 93.26 is the high over the last 26 weeks, half of a calendar year. I'm doing this analysis to understand how likely is price on light sweet crude expected to go into that first resistance, into that second resistance zone, and then I can look at momentum to see if that is expected as well. I've got consolidating momentum from some of these indicators here, but I've got bullish on MACD predicted. I've got RSI pushing up higher again, consolidated to bullish. I got consolidated on stochastic. True strength is bullish, percent R is bullish. So I am getting more bullish momentum related to light sweet crude oil. I can even go pop on my volume and see that I'm getting increasing bullish volume, right? Since that gap up, I'm getting increasing bullish volume, which tells me I have enough volume and momentum for light sweet crude oil prices to push in and through that resistance zone and those resistance levels. Just think about that. Very different than what we were seeing on the S&P, different than what we were seeing on the other markets we've looked at. We do have enough momentum and volume to push through those resistance levels and get a potential resistance breakout on light sweet crude oil. For those of you that look at light sweet crude oil and analyze light sweet crude oil, you can probably see where that was forecasted at 6:30 p.m. Eastern time last night, and that information would have been very valuable on the crude oil move today. The crude oil move is up 2% today. It's at 83.16. Vantage Point predicted a high of 83.04 at 6:30 last night. Look, I'm going to show you. I'm hovering over that gray bar. Look at the predicted high, 83.04. Would you have predicted personally without the artificial intelligence within, what is that, 12 cents of where crude oil is right now, where it's trading, where it's at? It's at 83.14 as we speak. Vantage Point predicted that at 6:30 last night. Now, again, I'm just looking at the indicators and doing some analysis on the indicators, but it's safe to say Vantage Point had light sweet crude oil pegged on that analysis. Very valuable forecast there. All right. We talked CPI. We've got a good market overview. We see light sweet crude oils increasing. We see gold is expected to continue increasing slightly. We see the dollar is expected to continue falling. The S&P 500 is in consolidation. What does that mean for Apple? We'll take a look at Apple. When you take a look at the Apple chart, the first thing that you can see is that blue line crossed below that gray line, and the shaded area went from green to red at 6:30 p.m. Eastern time last night. The predicted high and predicted low are slightly lower. It doesn't mean it's going to be a down day. It just means that the range of that day is expected to be lower than the range of the previous day. We also have weakness from our predicted neural index, our strength indicator. We have weakness in our momentum indicators. We can see that we've got a faltering, let's call it, forecasted in Apple. Well, if there's anybody out there that's long Apple or thinking about, or an investor in Apple and you've got a covered call strategy, you could probably see where Vantage Point clearly indicated there's an opportunity to write some covered calls and mitigate that downside risk. Or maybe you just like to short the market, or maybe you want to buy puts on it. Or that's up to you. Your trade style, your strategy, you can apply these forecasts to that information very quickly, but we can see Apple had a weakening expected. Prices could be anywhere within this predicted high and predicted low, 162.24 to 159.90. Apple's right now at 161.45. So it's literally right here within that gray bar, exactly where Vantage Point said Apple was expected to be today. The interesting thing about Apple, there was no impact from CPI on the movements or the projections of Apple. Apple is doing exactly what Vantage Point indicated it would do, and that update came out at 6:30 last night. Let's add our other indicators into this. I'm just going to load the indicators we've looked at so far. I've got a list of indicators I can add, but basically what I'm seeing is it bounced off of our resistance back here. It set a new resistance level, and it's just kept on falling. Now, it hasn't retested that resistance level per se just yet. Hasn't worked itself back up, so I can see where that may happen before it goes lower. But my momentum indicators will tell me how likely it is to test that resistance level today. And my momentum indicators are forecasting bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. I read them very quickly. Utilizing this information and these indicators on a day-to-day basis will give you the ability to do that. But what we're seeing is that this bullish trend in Apple was forecasted to come to an end at this point. Apple's expected to stagnate and then go lower based on what the artificial intelligence is saying. And, you know, mind you, let me just point something out. This is after a very powerful forecast from crossover to crossover here on Apple, a very powerful forecast generating over 7%. Hypothetically, $5,000 in gains with 500 shares. There's 3 forecasts. As a matter of fact, if I back up this Apple chart, in the last 3 months, since beginning of the year, there are 3 forecasts on Apple. A bullish forecasted trend, right? There you go. Some substantial gains to the upside. This is the underlying. A bearish one, call that a consolidation. Heck, we can call that, I'll call that a loser. You know what? Let's be worst case scenario. I'm going to put the losers down here and the winners up here, right? And then a bullish forecast from Apple here. Call that, out of the beginning of this year to now, 2 out of 3 very powerful, accurate forecasts generating 22% potential gains here. Again, we're talking about hypothetically. And 1.5 will round up 2% loss. That's a 20%. You can do the math yourself. I'm just highlighting crossover to crossover. That is a 20% difference to the green side on the forecast on Apple since the beginning of the year. Take a step back and think about that. Go look at your trading results. Go look at what you've been doing related to the market so far from the beginning of the year, and take a look and understand, is 20% on one stock, 3 trends with a 2-to-1 win rate, something that you would see as valuable, all while protecting your downside? Because personally, again, we're talking hypothetically here on Apple, but you can see that's the actual forecast that happened since the beginning of the year using the artificial intelligence. Personally, I'd say that's very, very valuable, right? All right, so here's Amazon. HM, if we've got some time here in a bit, I will certainly bring up the Qs. I'll bring up the Qs. Jeffrey, just go to VantagePointForecast.com. Jeff was asking about the cost for the software. Go to that link. That'll give you the information you need. You can talk with us one-on-one. You know, Jeffrey, I don't know whether you're a stock trader, you trade futures and commodities. You can see over here on the left, there's currencies, there's Forex, there's over 35 Forex pairs, there's hundreds of ETFs. There's over 1,200 individual stock forecasts here in the US. There's also Canadian, 45 or more cryptocurrencies. So there's a lot of different assets covered, a lot of different markets. So I need to know what you're trading to really give you a good understanding of what it would take. But I appreciate you asking the question. All right, I'm not here to sell the software. I'm here to do some analysis. So let's jump back into Amazon. Here is the forecast for Amazon. Right away, you can see by looking at this, the blue line came down to cross that gray line. The neural index is red. The predictive differences are pointing down. Now, Vantage Point had a pretty big range on Amazon today, right? Overall, we're getting bearishness from our indicators. And I haven't even, added all of the indicators that I like to look at. I've added a few. We've gone through several of them, and I'll put them back on this chart as well. But I can see basically that this trend for Amazon, this bullish trend that was forecasted back here at the middle of March, that's a month-long trend, has been coming to an end, right? You can see that. Everything's crossing, moving lower. Vantage Point's forecasting things lower. We got a bearish momentum indication, a fresh bearish crossover on MACD, RSI coming out of overbought territory and pushing bearishly, consolidated here on TSI, and a very strong bearish reading on %R. This is the Williams %R enhanced with the artificial intelligence. We've added predictive information to the calculation. We can also see, check this out, look at resistance. It set this resistance level, and you can see the next day tried to even open there and go higher, and it couldn't, failed off of it. Right? That's a failure right there from that previous point. Now, we wouldn't see this resistance point until 2 days after, but it's safe to say once I get that resistance level printed on my chart, I can see prices clearly failed right there, expected to go lower. This is a great forecast for Amazon saying bearishness expected, really no bullishness expected here. The indicators are in agreement on things expected to fall related to Amazon, and I think I'd have to go look. And by the way, you can pop the results right into right into the chat box if you know what Amazon did. I need to go pull it up and take a look. Oh, yeah. Okay, so Amazon is down almost a point. It's currently at 99.20 if I'm looking at it correctly, 99.20. So you can see it's sitting right there around that Vantage Point predicted low. The Vantage Point predicted low was 98.98. What's the low on Amazon? 98.41. So it's literally gone right down where Vantage Point said it would. I always have to remind you, this is a forecast that came out at 6:30 p.m. Eastern time last night, right? So before the market even opened, we had this information. You had this information to make some trade decisions based on the artificial intelligence. And this analysis is key at doing, helping you understand, in my opinion, what's going on. Let's pull up volume on Amazon really quickly. I've got increasing bearish volume. Look, I got a big bearish volume spike from yesterday. I can even add a predicted ATR on here that can tell me what I can expect from a range standpoint. So if I want to set stop losses, I can see the ATR is $2.88. If I wanted to set a stop loss off of yesterday's close at $2.88, so down, call it 97.20, I can set a stop loss there. For some reason, I don't want to exit off of this forecast. You can make that decision on your own. I'm convinced enough from what the AI is saying that, profit taking is not a bad idea related to Amazon, thanks to that predictive information that you can see. And I got to say, profit taking on a trend that generated 6% in 19 trading days, hypothetical gain, 500 shares, 5 contracts, $3,000. You can't beat that, if you ask me. What's that saying? You're never going to lose money taking a profit, right? I don't care if it's 1%, 6%, or 20%, like we looked on Apple. Profit is a profit. Now, remember, I just want to remind everybody, nothing is guaranteed. I'm not providing trading advice, simply walking through what the artificial intelligence is saying so that you can get a clear picture of how the artificial intelligence works and what is being forecasted, all right? Here's an interesting one. Here's Chipotle. Oh, look at this. Let me back up. I'm just backing this chart up so you can see. Look, Chipotle was forecasted very clearly right here. We see the reversal forecasted. We see the uptrend, the downtrend forecast, the uptrend forecast. Probably, even if you don't have Vantage Point, you're starting to see the clarity that the AI can bring you. Here's a forecast of a downtrend right now. The neural index is green, so it's saying there could be some quick strength in this. The one-day momentum has some bullishness, but the 2- and 3-day don't. So this is a great example. If we compare Chipotle to Amazon, it's saying this uptrend is expected to come to an end, but it's also saying there's some short-term strength in CMG, right? This is one of those scenarios where instead of, of course your trading plan is your trading plan, but maybe it's not an exit scenario, it's a tighten the stop loss scenario because of that little strength that we're seeing here, right? Again, Vantage Point can help you make that decision, and you can see I made that decision based on what we saw already. But let's go add those other indicators that I put on, and there's more, obviously. I've got some momentum indicators and support and resistance. Oh, look at this. We got a resistance level up here at 1743, right there. You see it, 1740. We got a predicted high right here at 1728. Well, if we see Amazon spike up to that, that would be some bullishness. But when we look at momentum, we can see if it does get up there, the likelihood it stays up there is low because I'm getting consolidated and bearish momentum from my momentum indicators. Remember what I said? And yeah, I can pop volume on there. Let me just do that. We looked at it before. There you go. I'm getting decreasing bullish volume, which tells me there is a little bit of strength from a volume standpoint, but it's not increasing, which means volume is not supporting prices going higher. So if it does pop up to that resistance level, it's likely to retest somewhere above that 1720 mark, but unlikely to stay above it, right? Let's see. Chipotle. All right. Chipotle's high today, 1733. I'll mark that right here with a line. I'm just going to show you 17. 33.23. I'm just marking it with a line to show you the high, the actual high based on what's going on in the market. Currently it's at 17.17. So it's right there. So again, what I was just saying a second ago is exactly what's going on with Chipotle. It's up around that predicted high. It's trying to test that resistance level, but it does not have enough momentum to test, break, and stay above it. As a matter of fact, that retest would be expected to fail based on the fact there isn't any momentum there. And I'm getting all this just by interpreting the very simple, easy to use indicators generated from the AI. Now, the inner markets for Chipotle are a little different, right? If I brought up the inner markets, meaning what is the AI looking at? Wingstop, Ford is in there, Edward Life Sciences, right? Moderna. The inner markets are different depending on what asset I'm looking at. The AI knows what those markets are because it's analyzing millions and millions of data points, right? All right, Tesla. Let me just go straight to the charts you've been looking at, or the indicators you've been looking at, so you can get a quick view on Tesla. One note, let me point this out. VantagePoint is telling me, be on the lookout. There is earnings coming out on Tesla April 19th. That's 7 days from now. That means if I have an earnings play or strategy as part of my trade plan, well, I'm in that window. It's about a 2 to 3 week window. I'm in that window where I have to start thinking about whether or not earnings is something that I want to deal with. That's a personal decision up to you, right? Nobody is going to make that decision for you, but the software is indicating that you have to be on the lookout for that information right there on the screen with that earnings flag. All right. By the way, there's a set of indicators that every single person that gets started with VantagePoint gets access to. Let me show you those. That's this set of indicators right here without the earnings flag. Then there's a set of indicators that you more advanced traders want to get access to, like the momentum indicators. They're not required. I don't want anybody to think you got to look at all of these. That's not the case. If that's a set of indicators you'd like to apply, then you can certainly add them as you learn the Vantage Point indicators. We don't want to, throw the entire book at somebody. We want to teach you. We want to layer it. If you don't have it, for those of you that have Vantage Point, I think you can understand what I'm saying here. And those of you that don't, obviously, there's a great way to layer your education in these indicators so you can gain some confidence. Let's see. Since it can predict 3 days out, how far should we have a strike price, 1 week or more, or just follow the blue line? Taylor, you're talking about from an options standpoint. I'll walk through that. Absolutely. So if I got a bearish forecast, this is a bad example because of earnings. Let's go back to Chipotle, since we talked about that one in detail. The most successful options trading strategy that I've been able to apply to the software is when I see this crossover and I get my confirmation from my neural index, my predictive differences, and my momentum indicators and volume are all lining up like they did 3.8, 3.7. You can see it right here. Set this is, again, not trading advice, just what I've found in my experience. I can set a 60-day expiration. A 60-day expiration is going to give enough time for that option to mature. And if at any point inside of that 60 days, I don't have to wait to expiration. As a matter of fact, March 8th, buying a May call, right, with a May expiration call, that gives me enough time to say, you know what, if at any point this option isn't going the way I want it to, I can strike, I can close that position. I can set my strike price depending on how I like to trade, at or near the money or in the money. That part is up to you. But if you've got that predicted gray bar, which you would have had, you could have set a strike price with a good premium and a good delta inside of that gray bar, right? And then as long as that trend continues going in your favor, you can, just continue making those gains until you get across to the downside. Now you can see I'm not in May yet. I can make the decision on Chipotle because I've got a 60-day expiration that I've had enough from this trend, and I can close that position. I can sell those calls back, take advantage of the intrinsic and extrinsic value, and get out of that position before time decay starts to set in, right? If I want to do covered calls at this point, same situation. There you go, Steve. If I want to do covered calls at this point, I can simply look at this and say, hey, now is a great time to write a covered call. what expiration, or excuse me, what strike price do I want to do from a covered call standpoint? Again, here is that gray bar, right? I can select the strike price that's going to get me the most premium, that has the most interest, right? And is going to give me, as a seller, obviously, the lowest delta. That's going to give me all the information I need to make a decision based on a covered call. Now, I'm not going to pick a strike price within that gray bar because that's likely. That's where using the resistance indicators come in extremely handy. I have a resistance level up here at 1754. I also have a new resistance level up here at 1776. I can use either one of those to write some covered calls depending on where the interest is, depending on the premium I want to make, and utilize that information for some quick income. All right. All right, good. I think we've got that covered pretty well. Looking at the time, there was some Forex requests. I think it was the GBP USD, or maybe it might have been the Euro USD, but I can pull both of those up very quickly. All right, here we go. Euro USD. We've got both of them in the software. I've got all of the indicators applied, and what I can see from a GBP or Euro USD standpoint is I've got some consolidation happening. Very clearly got some consolidation happening. I'm going to go pull it up and take a look and see what we've got from a forecast related to this. The bullishness is forecasted back here. No change in bullishness, just some short-term consolidation. Predicted high expected to be higher, predicted low expected to be higher on the Euro USD. I can see that very easily. Matter of fact, I have a resistance level up here. My resistance level is at 109.73. So that 973 mark is a level where it's like I could expect the dollar to go up there because there's nothing stopping it. I have some momentum standpoint. I've got consolidated, bullish, bearish, consolidated, bullish, bearish. So my momentum indicators are all over the place. So what's going to drive the GBP USD higher? Do you remember what we looked at? Or excuse me, the Euro USD higher. Remember what we looked at related to the dollar? Remember where I said the dollar is expected to fall today? What would make the Euro USD pair go higher? That would be the dollar falling. We saw that the dollar was expected to fall greatly, consolidate and go lower, right? We saw that very clearly. So when I think about the Euro USD, if I scroll on over from a Euro USD standpoint, I can use that information to help me understand what's expected to happen. That's using intermarket analysis along with real-time market correlations, right? And I think everybody can see very easily where that analysis is easy to do if you've got the right information. Let's take a look. What was the other one? The pound dollar. I'm trying to look at the comments here. I pulled up the pound chief. Let's go pound dollar. Here we go. Again, bullishness. You see the blue line is above, pushing higher. The predicted high is up here. It's got room to resistance. It did kind of retest that resistance level, but it's working its way back up to test it again. We have a little bit more bullish momentum on this than we had the Euro USD, but no matter what, VantagePoint has been long the pound since back here. How many pips is that? 322 pips since that bullish forecast to the long side. So can it be used on Forex? Absolutely. I think you could see that from an interpretation standpoint. You're welcome, Mike. Let's see. There was another question. Oh, the Qs. By the way, I've got a few minutes here, so if there is a certain ticker or something you want to take a look at, then by all means, please let me know. Renee, are these recorded? Renee, this information is available on the VantagePoint YouTube channel. Do me a favor, everybody that's in here or watching this, subscribe to the channel, go check out the videos, go to the live section, and you'll see all of the previous lives, right? So everybody should be able to see that. Here's the Qs. So doing some analysis on the Qs, what we're seeing from a Q standpoint, this is by the way, the NASDAQ. We're seeing the same kind of situation. The blue line's flattened out, very similar to the ES. Momentum is flat. We do have weakness from a neural index standpoint. So this is weaker than what we were seeing on the ES because we can see it's sitting down around support, trying to get back down to support. It's got more bearish momentum than the ES. So although there's consolidation and channeling happening, we can see that the likelihood that this gets down where that predicted low is. Let's look at that predicted low. Vantage Point is predicting a low of 312.90 on the Qs. I got to go pull it up and go take a look at what the low is at. Okay, what's the low here today? 313.50. So it's literally right down here in the bottom part. It's currently at 315.64. That 315.64 is dead center of that gray bar, weaker than it was yesterday. It's sitting right at where basically it closed yesterday. So again, that consolidation with a little bit of weakness that the indicators said we could expect in the Qs today. And right now at 12:43 in the afternoon, it's doing exactly that. It's doing exactly what Vantage Point was indicating. Hopefully that was helpful for you. Here we go, DAX. There you go. From an indices standpoint, I think everybody can see the DAX. Sinister. If you don't know about the DAX is a German index. It's something that is valuable and traded. A lot of people out there trading it from a international market standpoint. Vantage Point does forecast internationally. As you can see right now on the screen, we're looking right at it. So if we go look at that, we can see that there is some bullishness expected from a DAX forecast standpoint. Not a ton of bullishness to get much higher than this. You can see right there on the screen, 15,878 would be the max that we would see the DAX get up to. We do have momentum flattening in some of these areas. Look at this. So the DAX is taking a bit of a course like the ES. I think you can see that there's even some bearish momentum working itself in. Here's bullish on TSI. Here's consolidating on %R. So again, we're seeing a lot of channeling happening in a lot of the indices at this point around the world, and that's been happening for several days, and Vantage Point said that we could expect that to happen in the DAX as well. Sinister, tell me, use the chat box, let me know if that's valuable for you. Yes, HM77, I'm just shortening your name here. Yes, it is very, very impressive in my opinion. And even if we kick it back to the indicators that come right out of the box, interpretation, very clear, bullishness with some weakening in momentum on the DAX. So we can see that there is some consolidation expected and predicted high, not any higher than 15.8. You're welcome. You're welcome. Bud, let's see. BUD. There we go. Fresh crossover on Bud. When you look at that, you can see that there was a gap down and a cross to the downside. Vantage Point is expecting Bud to be lower today. This is a great example of a trend completion from the bullish crossover to the bearish crossover. Just connecting those two is about a 7.5% difference. That's a very powerful forecast. I mean, you're talking about 0.5% gain a day on average. That's a 16-day trend right there. And you can see the entirety, pardon me, you can see the entirety of it. Here's a really cool thing about momentum. Look what happened with momentum. Momentum started peeling off back here. I'm just going to drop a line to show you how valuable it is to have these indicators. Momentum started peeling off before price started peeling off. As soon as price weakened, it basically did its thing. We know what the controversy was related to the cans. The question is, did that cause people utilizing these predictive indicators hurt the forecast? No, I went from cross to the close of yesterday. Still over 7.5% hypothetical gains right here on Bud. And if you don't know about the Bud Light cans and the controversy, well, then that's something you can go check out. But that's what caused this gap down. A fundamental report that caused prices to move erratically, although the predicted momentum indicators were already saying momentum is leaving, strength is leaving, and then the trend predictor went right along with it. Matter of fact, if I cut this back to the short-term crossover, there was a bearish crossover right here. This is a one-day trend predictor on 4/5 that said the one-day forecast on this is coming to an end, and that was before that news broke. So hopefully that's what you were looking for when we're talking about Bud. I think it was Steve. Yep. All right, HES. Jeff, let's take a look. I didn't pull it up. Let me get it over here. Nice bullish trend on Hess. You can see the crossover happened here, 327. Right now, right out of the box. And this is a great example of where there is bullishness forecasted, continued bullishness expected from a predicted high and predicted low. My predicted high is higher, my predicted low is higher. Short-term strength in the trend, higher lows on the long term, higher lows on the medium term with a little bit of weakness. We are seeing some weakness pull back here, but we're seeing some quick changes and changes related to momentum. Right, we've got some bullishness, some bearishness, and some consolidated from these momentum indicators. Right, volume, we're getting bullish volume, not increasing bullish volume. So let's see if momentum would be supporting prices moving higher. And then let's go see with these add-on indicators. Again, I'm adding additional indicators on to see if I can get a good assessment at 6:30 last night on what Hess was expected to do. All right, we've broken that resistance level. We've got to close inside of that first resistance level. Let me show you. Here's the resistance level. Broke it yesterday. Now we got to close inside of it. We need another close inside of it to say it's expected to go up to the next level at 148.30. We need momentum to break that level. So let's go see if we have bullish momentum. Yes. Bullish momentum. Yes. Consolidated momentum. Bullish momentum. Yes. Bullish momentum. Yes. So I have no concerns. I've got bullish volume and bullish momentum saying from the AI, prices are expected to go higher in Hess. Well, I don't know. Let me go look. Prices are up. So Hess is up 1.46%, sitting at 146.90. Thank you, artificial intelligence. Provided some really great information around that forecast. The predicted high today was 146.90. Look. I'm going to show you the predicted high. You go check in your platform right now. Where is Hess currently at? VantagePoint forecasted at 6:30 last night, a 146.90 high. I'm going to look at online right now. I can Google Hess, right? Hess stock, just like anybody else can, or maybe you can go check your platform. But if I Google it, there you go, 147.02, sitting right there at that 146.90. This is obviously from Google, slightly bit delayed, a few minutes. But tell me in the chat box, where is Hess right now? Right? Did it do what VantagePoint was indicating? All right, let's see. Let's see. Gold, we hit that, Noel. Rewind back on that to check out gold. Snap. By the way, Snap is in VantagePoint. I think we talked about Snap earlier in the week. Renee, I'm not quite sure. Bearishness on Snap, but we do have momentum changes happening. Take a look at this. Take a look at the momentum changes going on in Snap, right? By the way, this is right away, as soon as I bring up Snap, for anybody that does any chart analysis, you can see that there is a major channel from 1240 to call it 10 bucks. Snap's just banging around between that support and resistance. It's moving sideways across my screen. When I look at that, nothing excites me about Snap. I don't care what the company does or who the company is. There's nothing about what's happening with this channel for the last several months, even from a forecasted standpoint with Snap, that excites me. We're getting bearishness from the predicted low. We did get a close. We got a couple of closes inside of this support level saying we could expect Snap to continue falling. Maybe it might not fall right away because there is bullish and consolidating momentum happening. There's a lot of indicators that are not in agreement on Snap, and with the channeling that's happening, this is one of those that's like, for me, might be different than you, and I'm just providing you my education here, not advice. Nothing exciting about Snap over the last several months. The risk is not worth the reward in my book, but I might be a little bit more risk adverse than you, and that's okay. But what we're saying, thank you, Dennis. Dennis said 146.96 on Hess. That's 6 cents, my friend. Thank you for putting that in there. Thank you, Steve. Steve and I were talking about in a session yesterday about ICPT yesterday, about the bullishness that was coming out of ICPT. We did a scan because there is a feature in VantagePoint that'll scan and find the ideal setups so that you can do your analysis. ICTP was one of those, and glad to see it's the trend forecast is being supported from the price change. So I got 1252. I probably went longer than anybody expected, including me. So I'm gonna taper things off here and bring it to an end. You know, it's always a pleasure giving you a good view into the VantagePoint software and analyzing it. As you can tell, the CPI print didn't really have an impact. The forecast in VantagePoint, regardless of major fundamental events like that, spot on. Almost every asset we looked at did exactly what VantagePoint expected it to do in some way, shape, or form at 6:30 last night. And I get the pleasure of looking at this every single day, and every single day I get more and more impressed. If you have questions or you're seeing stuff you like here, just go to VantagePointSoftware.com. We can answer your questions one-on-one. And as I like to say, I appreciate your time, and thank you for letting me give you the view from my vantage point. I'm going to sign off. Best of luck to your trading.